Joining us now, Stephen Roach, Yale University Senior Fellow and a former chairman of Morgan Stanley Asia. Stephen, great to have you on the show. Thanks for being with us today.
Thank you, Morgan.
I do want to start with this very anticipated meeting between Blinken and his counterparts in China. Your expectations, are we actually going to see any kind of diplomatic breakthrough or thaw in terms of the relationship between these two countries?
I doubt it. This is, a meeting that was supposed to take place over 4 months ago and was deferred for very contentious reasons. And if anything, circumstances have gotten a lot worse politically between the two countries since then, with a number of incidents. And, politics drives diplomacy, and the bipartisan sentiment in Congress right now is so anti-China that I think Blinken's hands are really tied here. I have low expectations. Possibly, that's an opportunity for a bit of a surprise, but I wouldn't count on it.
Yeah, I mean, and we can talk about the geopolitics and the tensions there, but how about the politics domestically in China? Because we did see data this week coming out of the country that missed expectations. It was disappointing. You have an unemployment rate among young adults that is greater than 20% right now. Some real signs of softness in that economy, despite reopening coming out of COVID. Growing expectations, you're going to see more stimulus there as well. How much does that factor into how investors need to think about investing in the country, and I guess also into these talks that we're going to see unfold over the next couple of days?
Well, I'd make the distinction between the weakness in the economy, which, as you correctly described, is very problematic for China and will evoke a fairly significant stimulus to be announced shortly by Beijing, and any response that China may have because of that weakness to the United States. I think there are two different sets of considerations, two different buckets, and I think China is just going to hold a very tough line with respect to the U.S.
Stephen, got to mention, you got this new book out, Accidental Conflict, America, China, and the Clash of False Narratives. You say that both sides have the wrong idea about each other and that there is a way to forge an advantageous relationship from here. First, what does China have wrong about the U.S. and its motives that's relevant to the market here?
Well, the book focuses on equally on false narratives on both sides. One of the leading ones from the Chinese side, John, is that China blames U.S. strategic containment for its inability to reform and restructure its economy. China hasn't reformed and restructured its economy because of its own flawed strategy. It has very little, if not anything, to do with America's aggressive policies of containment.
And so what do we believe wrong about China that where there's perhaps economic opportunity here?
Well, we believe that China is the largest contributor to our trade deficit, which has destroyed American companies, jobs, and communities. And they're doing that because of the way they cheat on trade. What that narrative fails to take into account is that we had trade deficits last year, John, with 106 countries, in large part reflecting our own shortfall of domestic savings. So we put tariffs on China to try to solve our trade problems for American families, and it does nothing. It squeezes the Chinese piece of our trade deficit, but it shifts it to other higher cost countries that still put a lot of pressure on American companies.